Hi, my name is Wan Amalina binti Wan Azim.
Hi, my name is Tasnim binti Mustafa.
Hi Tasnim, I didn't expect to see you here. What are you doing? Mind if I join you?
Hi, Amalina. Sure, do have a seat. I was just revising for our quiz tomorrow morning.
Oh right, the quiz on tax audit, right? I just finished studying for that last night. Well, how is it going?
I think it's going well. I have read and tried to understand all the notes, but I'm not sure if I completely memorized them.
I see. How about we both ask each other on tax audit, but we cannot look for our notes?
Okay, that's a good idea. I want to ask you what you know about tax audit. Do you know what is the definition?
Tax audit is an examination of a taxpayer's tax returns and financial records by tax authorities to ensure accuracy and compliance with tax laws.
If you say so, what is the purpose for it?
The purpose, the main objective, is to verify that the information provided on tax returns is correct and that the correct amount of tax has been paid.
True, it is the auditor's job to check for errors, omission, and possible fraudulent activity.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Anis Naziha binti Zahri.
Hi everyone, my name is Fatima Shika binti Sheikh. So Anis, there are two types of audit, tax audit and field audit. What if you explain to me what tax audit is and I will explain to you what field audit is?
Sure, Fatin. That sounds like a great idea. So, a tax audit, as I understand it, a tax audit is held at the IRBM's office. It involves issues or adjustment of incomes and tax that can be resolved by correspondence. A taxpayer may be called for an interview at IRBM's office if further information is required. So generally, a tax audit involves checking all information on income and expenses as well as various types of claims made by a taxpayer in his income tax return. Furthermore, in certain circumstances, a tax audit case may be referred for a field audit action. Under such circumstances, the taxpayer will be informed through a field audit notification letter as part of the normal process of commencing the field audit. What about field audit, Fatin?
Oh, now I understand. Based on my understanding, field audit is one that takes place at a taxpayer's premise. It involves the examination of the taxpayer's business records. In the case of a sole proprietorship or partnership, if the taxpayer's business records are incomplete, it may involve the examination of non-business records such as personal bank statements. A taxpayer will be given 14 days notice prior to a field audit. There are three components in field audit, which is general compliance audit, issue-based audit, and special audit. In issue-based audit, there is expenses claim, capital allowance, withholding tax, incentives, and other technical issues. In special audit, there is transfer pricing, electronic trading, and international client audit.
It's making sense to me now. I can see how all the pieces fit together. Thank you.
We both know that there are two types of tax audit, which are desk audit and field audit. What's the difference between them?
Field audit is more comprehensive and there is a need for a detailed examination of the tax return and financial records, while desk audit is limited in scope and only focuses on specific items or issues on the tax return.
Yes, and field audit can cover multiple aspects of the taxpayer's financial situation such as income, expenses, and deductions, while desk audit typically involves verifying deductions, credits, or income items.
Exactly. While for the process aspect, desk audit is conducted through mail or online, while field audit can be conducted in person by an auditor who visits the taxpayer's home place of business or their accountant's office.
That is why there is no in-person meeting or visits by the auditor for desk audit, while field audit can involve face-to-face interaction with the auditor. What about the time and complexity for both types of audits? Which one do you think is quicker?
I think desk audit is quicker and less complex than field audit since it is less intrusive as it doesn't require face-to-face interactions like field audit, which is more time-consuming and complex.
Okay, now let's continue on audit process. As I know, there are 6 processes, right?
Yeah, exactly. This include the audit venue, audit commencement, the visit, record examination, audit time frame, and settlement of the audit.
Can you explain the first 2 processes to me? Then I will explain the last 3 processes to you.
Sure, Fatin, I'm happy to explain the first 3 processes to you. Let's start with the audit venue, audit commencement, and the visit. So the first process is audit venue. In the process of audit venue, it is where a desk audit is carried out at the RBM's office, whereas a field audit is carried out at the taxpayer's business premise. Where the business premises are not suitable, the taxpayer may suggest a suitable alternative for RBM's agreement. After that, continue to the second process, which is audit commencement. In audit commencement, it actually is initial audit action. A surat memohon dokumen dan maklumat, which is a request for documents and information letter, will be issued to the taxpayer by official email or fax or mail to acquire documents and information. It is the case where the taxpayer is required to submit documents and information. The taxpayer is required to provide feedback within 40 calendar days from the date of the surat memohon dokumen dan maklumat, request for document and information letter. If the taxpayer fails to provide feedback within the time specified, the audit action will be resumed using the appropriate method. In the case of a desk audit, the surat memohon dokumen dan maklumat, request for documents and information letter, will not be issued in certain cases, but the taxpayer will be notified of any income or and tax adjustment that will be issued with the notice of assessment. Moreover, in the case of a field audit, a surat pemberitahuan lawatan pematuhan, which is compliance visit notification letter, will be issued to the taxpayer at least 14 calendar days prior to the date of visit. If a surat pemberitahuan lawatan pematuhan, compliance visit notification letter has been issued, the taxpayer may apply to postpone the date of the audit visit on reasonable grounds and unavoidable circumstances. Continue to the third process, which is the visit. An audit visit is only applicable to the field audit. The audit normally starts off with an interview. The purpose of an interview is to enable the audit officers to meet the taxpayer, obtain an overview of the taxpayer's business activity, and to discuss the audit. The taxpayer will be asked to explain his business activities, accounting, and record keeping system. During the audit process, the person responsible for the handling of the taxpayer's business record will also be interviewed. That's the first 3 process. Now it's your turn to explain, Fatin.
Thank you for explaining those concepts so clearly. Now I will continue to the next process, which is examination of records. During an audit, the audit officer should be able to review all business records as well as physically inspect stock and equipment to verify the claims. Records from years of evaluation that are already time restricted will not be checked. In certain cases, it may be necessary to examine records other than business records while auditing sole proprietorships and partnerships. Records is books of accounts for recording receipts and payments or income and expenditure and all records relating to the business. Other than records is statement of personal bank accounts, records relating to the purchase of properties, records relating to the taxpayer's personal expenses, other statements as may be required under Section 79 of the ITA. The fifth process is audit time frame. The time required to complete an on-site examination of records is 1 to 3 days. However, the audit time frame for field audit may be extended depending on the following factors: the size of the business and the complexity of business transactions, the form in which records are kept, or the extent of cooperation from the taxpayer, the audit timeframe is applicable only to field audits. The last process is settlements of audit. If tax adjustments are needed, a notification with details and reasons for the changes will be sent. The taxpayer can give their views and explanations on the audit findings and proposed adjustments. The taxpayer has 18 days from the date of the notification to file an official objection if they disagree with the proposed adjustments. They should provide additional information and evidence to support their objection. If the taxpayer doesn't object within 18 days of being notified about proposed tax adjustments, it is assumed they agree with the changes. If an objection has no valid basis according to the ITA, the taxpayer will be informed. After that, a notice of additional assessment with a penalty under subsection 1122, paragraph 4B6D, or subsection 1123 of the ITA, or a notification stating no tax is due will be sent. If there are no adjustments, the taxpayer will receive a letter stating that the audit is complete without any changes. A tax audit should be completed within 19 calendar days from when it starts. If more time is needed, IRBM will update the taxpayer on the progress. Once the audit is finished, the same issues won't be audited again for the same year. However, if new issues or information arise, an audit can be conducted again for that same year.
Wow, I'm glad you explained it that way. It's much clearer to me now. Thank you, Fatin.
As we know, tax audit has a few conditions and selection criteria. Basically, they are methods and factors that tax authorities use to determine which tax returns to audit. What do you say if we both explain on the 6 audit selection criteria based on our understanding?
Sure, there are 6 audit selection criteria, which are location, specific industries, contentious tax, development, third-party information, risk analysis, and finally is the taxpayer's previous record of return.
Correct. Location is very important in tax audit. This is due to the higher concentration of listed companies and the well-established economic activities in some areas. That is why companies that are located in major cities such as Kuala Lumpur, Penang, Johor Bahru, and Malacca are more likely to be selected for tax audits compared to those in other cities.
Specific industries is also important in tax audit, especially industries that have dynamic developments, vulnerable, and have many unresolved and contentious issues. The specialized industries that the tax audit has selected is property developer, contractor, medical practitioners, taxi operators, palm oil plantation, telecommunication, and IT.
Next is contentious tax developments. The issues such as transfer pricing, withholding tax, interest restrictions, reinvestment allowances, and Section 4A, which is rental income, are likely to be prioritized for tax audits. This is due to the evolving interpretative differences among taxpayers, the IRB, and the court.
For the 4th audit selection criteria, which is third-party information, the IRB will initiate a tax audit on another taxpayer if there is reasonable suspicion of under-reporting business or rental income, based on the examination of revenue and expenses claimed by a related taxpayer.
Besides, risk analysis is also one of the factors for the selection criteria. The IRB uses information technology to compile statistics on the average turnover and gross profit for various industries. They then conduct risk analysis to identify and select companies that show significant discrepancies from these industry averages for potential tax audits.
The last one is the taxpayer's previous record of return. The taxpayer who keep submitting their returns late or fail to submit them at all are at a higher risk of being selected for a tax audit.
Wow, I can't believe that we have covered all this information without looking at our notes.
I know, right? Let's hope that we both can do well on our quiz tomorrow.
Inshallah, since the library is closing soon, let's head out now, shall we?
Sure, let's go.
Okay, now let's proceed with assessment and penalties. There are three of it: understatement of tax, provision of reasonable facilities and assistance, and keeping of records. Can you explain to me what is understatement of tax?
Sure. Understatements of tax is discovered after the commencement and audit that there has been an understatement or omission of income. Then a penalty will be imposed under subsection 113 or paragraph 44B6B of the ITA. The penalty rate equal to the amount of tax undercharged, 100% accordingly. However, the DGIR in exercising his discretionary powers may consider a lower penalty of 45% to be imposed for the first offence. Now can you explain to me what your understanding on provision of reasonable facilities and assistance, keeping of records?
Thanks for explaining that. It really helped me grasp the concept better. Okay, based on my understanding, in the assessment provision of reasonable facility and assistance, Section 80 and 80 subsection 1A, the taxpayer is obligated to provide reasonable facilities and assistance to the IRBM personnel when they are carrying out the field audit in the premise of taxpayers. Failure to do so is an offence under the Act. Upon conviction, the offender may be liable to a fine of 1,000 ringgit to 10,000 ringgit or imprisonment for up to 1 year or both. For the third assessment is keeping of records. Based on Section 82, subsection 1A, every taxpayer carrying on a business shall keep and retain in safe custody sufficient records for as long as 7 years from the end of the year to which the business income or adjusted loss relates to. Failure to comply with the requirement shall be guilty of an offence. Upon conviction, the offender shall be liable to a fine of 300 ringgit to 10,000 ringgit or imprisonment for up to 1 year or both.
Now I understand. Thanks for breaking that down. I'm really grateful for your help in understanding this.
No problem, Fatin.